Good morning, good afternoon, good evening, depending on where you are. Welcome back to yet another episode of the weekly market update with Irfan Khan and Joseph Di Virgilio.
Joseph DiVirgilio, guilt as charged. I'm a former hedge fund manager with 27 years experience on Wall Street, running long short equity funds, credited for being the first to launch the very first sustainability focused hedge fund in history out of New York. And this is Irfan Khan. He's my partner in crime, investor, partner in everything we do here. I'll let him explain.
Yeah, there isn't that much more to add about it. I mean, on that front, that you said it all. So happy to be here with you on the show, Joe. And with that said, let's get right into it.
The 17th episode, I think, of the equity market update, what investors must know.
Thing like that. Yeah, we're getting close. And yeah, I want to take before we get into it, I want to say that we appreciate seeing that there's a increase in viewership. It means that we must be doing something
Right?
decent. More and more people seem to be interested in listening to what we have to say, and let's it bodes really well. You know, it's
Yeah. We thank everybody. We want to thank everybody for their effort in helping us out, liking, subscribing, and sharing and commenting, especially. Seen an increase in comments as well. So this week we're going to obviously go through economic data, what the markets have done last week, what to expect next week, and what's going on with the geopolitical situation that affects financial markets. But we start before all that with the statistic of the week. If fun, go
yeah,
ahead, shoot.
yeah. Well, so I guess this is the underlying reason for which people are investors for the medium to long term in the first place, right? Which is up is the default. Okay, that means meaning that the stock market has a 70% probability, so more than two-thirds, of going up in any given year.
Correct. So what does that mean? That means that markets have a long bias. And I've said this a million times. You never see an equity market crash and never come back. I mean, it might stay down there for a while in some cases, but they always come back. And on average, 18 months later, they're at new highs. So what this is basically saying that you want to invest for the long term because your probability of winning are 70%, because the market is a long bias. It always goes up. It doesn't always go down. People invest in the stock market because of that reason. So as a result, markets tend to always go up. And that 70% is massive. Now,
Yeah.
beating the market, that entails a different story. So if you're investing in a stock market for the long term, and now we just said 70% of the market has a 70% probability of going up in any given year. To beat the market, that's a different story. Just a 50 point some percent, 50 point some percent is that ratio. In other words, if you beat the markets, it's always by very little all the time. And then another thing, it's very interesting to point out that U.S. stock market, emerging markets, developed markets, equity indices, they are correlated to each other to a certain extent, but over a given period of time, they always get to the same point. So when you see the S&P 500 goes like this, say the Euro Stock 600 is a little lower, and emerging markets say they're flat. But if you take 10 years, they all end up pretty much with the same type of returns, ballpark. So
Okay, well, that's new, because I used to think, and I think lots of people in our audience, especially the non-Americans, they probably thought, the U.S., the New York Stock Exchange market is probably more interesting or more profitable than the average European one or the index fund in some other market.
one can talk about liquidity and the dynamics of markets, but like I said, over a string of years, either you have markets that are not correlated to each other for whatever macroeconomic reason, but once those macroeconomic reasons resolve, they all end up having ballpark the same type of returns over a string of years. So and that's why you say diversification is very important, because you might be underperforming emerging markets this year, and you might be doing nothing with European stocks next year, and you're going to be making money with, sorry, emerging markets are doing nothing Europe is doing nothing, and America is growing, that dynamic changes. It doesn't always stay like that. And then if you take a 10-year period, they all end up having the same type of returns in the end, more or less. I'm not
So
talking.
you're saying it's not true that basically the New York Stock Exchange is usually the most profitable, the most successful one, and all that
No,
over.
there've been periods of time where emerging markets have done a lot better than developed markets. Look at during the 2004, 2005, 2006 cycle.
But could you argue that the emerging markets are also more volatile?
Oh yeah, oh absolutely, because they're less regulated, they have less liquidity.
Less liquidity is a key term there, I guess.
Absolutely, of course, absolutely. And I just want to throw this out there because people have this. There's a general misconception that that the markets, they all have their own returns, which is true to a certain extent, but over a certain period of time, they all kind of catch up to each other. That's what I'm trying to say. So yeah, equity markets last week, ending May 1st, which was a holiday in Europe. Was it Friday? Yeah, right. It was a holiday in Europe. The U.S. equity markets reached a new highs, fueled by robust corporate earnings and cooling of energy prices. That's because of the Strait of Hormuz. At least there's not been much going on there. But while it's still closed and there's a blockade from Trump and the Iranians have blocked it, but at least we haven't seen more strikes. And it seems like there might be something coming. The U.S. administration is hinting at some sort of a new strike on Iran. I'm hoping not. But while geopolitical tensions regarding Iran remained a backdrop, investors pivoted back to the AI megaforce and strong quarterly results from tech leaders like Apple. So we saw really good performance in the tech sectors last week.
Mm-hmm.
And actually, like I think I said this last week, where we're going to have a bunch of these Mag 7 earnings, they're going to kind of define where the market goes next. So if we don't have any really big geopolitical shock out of the Middle East, this should keep the tech industry going. So tech industry is really not affected by inflation. You might want to debate that they need energy to run, of course, run their businesses. But aside from that, I mean, what does geopolitical risk have anything to do with the tech industry or software, and software especially? So these companies are seeing a little bit of a breather. S&P 500 was up about 0.9% last week. The Nasdaq was up 1.1%, and the Dow Jones actually was up just 0.5%, just slightly underperforming the other two.
Mm-hmm.
That kind of tells me there's a little bit of a rotation from the really big companies like the Dow Jones, Dow 30, the largest companies and publicly traded companies in America. Those are slightly not doing as good as some more aggressive segments of the markets are, like I said, tech.
Mm-hmm.
So yeah,
Yeah.
earnings momentum, approximately 84% of reporting S&P 500 companies have beaten estimates with a blended earnings growth rate of about 15.1, the sixth straight quarter of double-digit growth. So again, when people were crying out loud saying AI spending, blah blah blah, too much, we don't know whether this is going to be monetized. It's all happening. It's going to continue.
I mean, I was reading an article the other day that a big difference between what's happening in the US and Europe, which could really make an even bigger difference in the years to come, is that the US economy is still looking to be doing really well, contrary to popular belief, mainly because of these humongous investments in AI, in data centers, especially by
That's
the
pretty much
largest
the only sector.
corporations.
It's the only pretty much. I wouldn't say the only one, but pretty much the only sector that's actually keeping the American economy afloat.
Yeah, I mean these from Meta to Microsoft to Google, they're investing cumulatively like hundreds of billions of dollars, hundreds of billions of dollars. It's something never seen before. I mean that firepower that they have is just being put on display right now. It's
And I'm gonna give you something else. Recently, the European Union has been aggressively trying to pull off the brakes on their bureaucracy and the difficulties in trying in having companies investing here, direct foreign investments in Europe, and they're pushing to they're really trying to incentivize the tech sector in Europe so that they can compete with the United States and create the Silicon Valley of Europe somewhere, and trying to
even though, of course, as usual, European governments need to really start, agreeing with each other, because otherwise everybody has their own, it's going to put their own self-interest in front. So,
but they're all very much on board with wanting to, compete with the United States as far as technology is concerned, because otherwise they've always been relying outside of a couple of companies like SAP, or I mean. They're highly dependent on U.S. companies and Chinese companies. So I'm not saying SAP is the only one, but I'm saying they are. It seems like they really want to make a big push for the development of a tech sector in Europe.
Yeah, I mean, and I remember just another couple of things. I remember there was a talk of potentially having building a European native credit card operator, because right now the main three in the world, Visa, MasterCard, and American Express, they're all American.
And that's the other thing. They're trying to make their own payment processing
exactly, yeah, their own payment processing infrastructure, and
was an initiative of Macron's initiative. Actually, he's the one that started talking about this, and I think
it needs to start from somebody, right? So. And then also there was talks of, a few weeks ago when there was that major.
I mean, if you just look at what happened with Russia, okay, when they invaded Ukraine back in 2022, Visa, MasterCard, Amex, they all pulled out. They all said, okay, you can't, So what did they have? Russians had to come up with a new idea, and so they created what's called MIR, which is this credit card. And so now, instead of having Visa and MasterCards, they use this MIR, and it's used you can use this in Russia, Turkey, some of the former Soviet states, and China, as an example. So that was their solution to Russia.
And then I remember there was also
Visas and MasterCards.
And I also remember there was when there was that rift between Anthropic and the U.S. government a few weeks ago.
Yeah. But the defense contract, I remember that.
Exactly. Then at some point there was rumor, at least in Europe, they were like, well, why don't we just get Anthropic to come in, move their headquarters to Europe somewhere, with open arms.
And it's funny enough, I think that the CEO of Anthropic, isn't he Italian or of Italian origin?
Dario Amodei, he is of Italian origin. I think, if I'm not mistaken, his dad moved to the U.S., but he was probably born in Italy. So
So he's I remember his last name. It wouldn't make sense. Hey, come to Italy. Let's go to Italy. So what the economic data? So GDP performance was at 2% annualized rate. Came out this last week. It was economists were expecting 2.3%. It was a little shy, but it was better than last year's. Better than last year's. So the Institute for Supply Management was held steady at 52.7 in April, indicating a continued expansion in the industrial sector. But it's there, but it's not much, but it's there. Jobless claims actually were better than expected, 189,000. It was lowest reading since 1969.
Wow.
It's labor tightness, that's for sure. Market tightness.
I mean, does that mean that if you're looking for a job, it's hard to find a job, or?
That too, because you don't have that many jobs available. So
wow.
Yeah. So the Strait of Hormuz, I want to go back to that because there's nothing, there's no resolution, there's nothing going on there. It's just a stalemate. There's only going back and forth between the Iranians and Pakistanis and the United States about proposals. And they're being rejected by both sides. I don't know what and how long this is going to take, but it's not sustainable. Like we talked about last week, Europe
starting to cancel flights.
canceling flights. They're 5 weeks, 4 or 5 weeks away from shortages of jet fuel. So it's pretty going to be pretty painful if this doesn't get resolved. Now, Italy is saying that they're going to send minesweeping boats to help the United States. They're
Yeah, there was the French and the Brits, I think.
yeah, also yeah, but we'll see. We will see if that happens.
Mm.
So we talked about the tech stock rebound, tech stocks rebound. Oh yeah, and the other thing, because Chancellor Merz said of Germany said that the U.S. was being humiliated by Iran. Now Trump
Ooh,
is
that
pulling
was
his
not taken
stunt
well.
of taking 5,000 U.S. troops out of Germany, NATO troops out of Germany in the coming 12 months. This is so stupid. This guy's a fucking idiot. I mean, he's just
By the way, just so that everybody understands this, pulling out 5,000 troops out of Germany means just taking the number of troops back to the
United States.
figure that we had before the Ukraine-Russia war.
Yeah, more or less something like that. Because we have about 35,000 troops in Germany. So figure,
I think overall across Europe, there are about 100,000 US troops
yeah, in
deployed.
Germany they're 35,000 or
Yeah.
something, 36,000.
So
So
taking 5,000 away is not anything super significant, although it's him wanting to send a signal, basically, I guess.
stock of the week, if I want to follow up on Aurora, the Aurora Innovations, the ticker is AUR. Make sure you guys don't do what I say in the sense that this is not investment advice. This is just my funds portfolio. Consult with your investment advisor for anything you want to do with your portfolio, but this is not investment advice. So this is stock that I have in a portfolio. It's called Aurora Innovations, rapidly scaling its autonomous tracking operations. They just announced a partnership with Hirschenbach to deploy 500 autonomous trucks, boosting stock confidence and promoting positive analyst rating. This was just happened last week, 3 days ago. Stock is skyrocketing. Happy that it's moving, and this should increase prospect for higher revenue growth in the coming months. So very, very good. When I saw the stock jump like that, I was like, wow, this finally is coming back alive because it was doing nothing for a while.
Mm-hmm. So it was a calm before the storm.
Yeah, calm before the storm. I always believed in them. So they're well capitalized. They're not profitable yet, but they can go for another 10
So the
years.
fundamentals were always good. It was just a matter of waiting, basically.
That's correct. Yeah.
Mm.
Hey,
Okay.
please, guys, comment, share, subscribe,
And like,
and like the video and the channel. That would help us very much. You're doing so, and we really appreciate it. And we'll see each other next week.
yeah, everybody have yourself a lovely Sunday.
And see you next week.